This is our Forex blog for October 30th, 2013, and this is our currency indexes, which show you what each currency is doing individually. For example, you can see what all the dollar pairs are doing as a whole, and when you can see them going down, they come up to the hourly moving average, can't get above it. That's typically a good place to sell. You know, when it comes down, it is not able to go back down to the previous low. When it breaks out through the multi-hour high, that's a very high probability place to buy, which leads to an absolutely huge move up. In most days and in most currencies, the lower bands and upper bands can tend to contain price, and so you want to basically trade if the trend is down underneath the hourly moving average, for instance. You want to trade on the short side until it hits, these lower bands. It tends to reverse. The vast majority of the time, that's what happens. So by looking at all these currencies, you can see which ones are strong, which ones are weak. You can also see the daily, weekly trend of the euros up. So when it, makes a slightly higher low and breaks out right here, that's a trend that's likely to continue. You can see for the next couple hours, on every pullback, it goes back up, which allows you to buy this strong currency versus one that's weaker. Now, a lot of traders don't really want to have to learn support resistance, Fibonacci retracements, as well as the pullbacks, multiple time frame analysis, and so we have created a series of signals. There's probably close to 150 of them now, and they pretty much tell you when to buy and sell at the close of each of these 5 pips per bar range charts. So you get short right here, you have a loss. You get long, goes up 1 bar, you move your stop to break even. You have maybe 5 pips of losses here, 5 or 10 pips, and you made 30 pips, you make 5 pips, you make 5 pips, 12 pips maybe, 20 pips, 20 pips, 5 pip loss, 7 pip loss, whatever. You can see the majority of the trades, as long as they go 1 bar your way, you move your stop pretty much close to break even. So you have a loss, win. Debatable here because it took too long to go up, so I'd say loss, win, loss, win, loss, win, loss, win, loss, win, loss. Yeah, it's possible it might be a win in a win. So the majority of the trades are wins, and this really helps new traders know what to do. But in my opinion, the easiest way to trade is just to use our currency indexes, and you can quickly see which ones are underneath the hourly, and if the longer time frame trend is also weak, then you want to sell those currencies. The euro's longer term trend is up, the pound, the weekly and monthly trend is down, and so you can just take a look at this and see that here was the high of the last 12 hours. It's in a nice little tight range. When it breaks down here at 330, you want to sell that one. It doesn't take a rocket scientist to figure that out. And the more times the trend line gets hit, you can see pretty much gets hit all along here and then breaks out just a little bit after 3. So you want to trade that against whatever's strongest at the time. So let's take a look at some of the other currencies. Now the Australian is very strong. However, it's also unfortunately already above its upper containment band. That's kind of the downside there. Ideally, you want to find a currency that's above its hourly moving average, but not too much up, maybe somewhere in this range right here, so that if it does go to the upper band and reverses, which oftentimes happens, you have good room for that currency to travel, and the pound just broke down. So I would go with the New Zealand, although the weekly trend is down on here. Let's take a look at the pound New Zealand, and also the pound Australian, coming up to 4 o'clock for a buy. I'm sorry, a sell in both of these. 4 o'clock, we're looking to sell this. And like I said, it's not the biggest trade in the world because this one's already kind of drifted down, and you can see that both the Australian and the New Zealand are near their upper bands, but at least you have an opportunity. You can see this is, it fell about 15-20 pips right here. If you sell the next little pullback, you made money. Let's take a look at the Australian, the pound Australian. Sometimes, unfortunately, there's not a whole slew of amazing setups at the exact same time. This one you'd go short right here, and it fell, just barely over 10 pips. But it did fall, and not every trade is going to be a huge win. Ideally, you find these strong currencies, for instance right here, the Swiss. A little bit after 4, it broke out from below to above its hourly. And on this little pullback right here, pretty high probability place to buy it, especially since it found support at the previous day's low. In other words, today it was not able to go lower than the lowest it was yesterday. That's very significant. And you can also see kind of a trend line off the area right here and close to 430. Great place to be buying this. The monthly trend is up. The weekly trend is just slightly down, which oftentimes happens after day and a half of down moves. And this is one that's likely to get strong. Let's take a look at the pound versus the Swiss. The pound's weak. The Swiss is strong. So this one's very likely to go down. And just knowing which currency to trade, allows you to, when you see this low right here, you can see it went down about 20 pips, pulled back up. And anytime you take a trade and you risk less than what your potential profit is, you can see this one kind of went sideways. You had every opportunity to get out of this trade with a small win. Usually that's what I do if it doesn't go my way in 30 or 40 minutes, and I'll just go short again, put my stop above the swing high, and you can see that was a very big win. And then you sell the next retracement up, and this is your risk, and this is your potential reward. Even if you get 2/3 of that swing, your wins are bigger than your loss. Wins are bigger than your loss. In this case, you made less than your risk. In this case, you made more than your risk. 1, 2, 3 out of 4 trades, your win was bigger than your loss. And that's what's apparently I paused the recording, so I'm not sure where I left off, but what I was trying to show was the New Zealand's weekly trend is down, the monthly trend is up. The Swiss has a monthly trend that's up, the weekly trend just slightly shifted down. It was up. It's finding a double bottom here, and so the Swiss is very likely to go up, the New Zealand's very likely to go down at 430, and like I showed in this chart right here, you have a double top right here. 430 comes, you're looking for a sell, and you have this nice little drop right here, small win, huge win, huge win. And the real key to trading is just, what is the size of your risk versus your profits taken, your average win. If your risk is 1/2 or 1/3, in other words, you're making 2 to 3 times more on your winning trades than you are losing, or that you are risking, you're going to trade well. And that's what's so amazing about the currency indexes. You can actually anticipate, and many times, future price moves 5 to sometimes an hour, 2 hours ahead of time. In this case, you really knew slightly after 4 that the Swiss was likely to get stronger because the monthly trend was up and it double bottomed at the previous day's low. The New Zealand was very likely to come down because it's at the upper containment band, and you can see the weekly trend is extremely weak. The monthly trend is just slightly up, and it made a big move up from the lower band. It went up significantly. It's likely to run out of buyers up here and pull back. It just at the same time, the Swiss is likely to go up. So you have a likely to be, soon to be weak New Zealand, soon to be strong Swiss, and you can absolutely nail the tops and bottoms frequently doing that.